Good day, everyone, and thank you for joining us at the WBA 2020 Regulatory Virtual Conference. We are very pleased to present this session, How COVID-19 Affected Your BSA Program. I'm Liz Slim. I'm CAM certified since 2004, and I am a senior consultant at the Volkov Law Group. But as for my background, I have been in the financial institution industry for over 35 years, and 15 of those years was as a dedicated BSA officer. I'm also the founder and co-chair of the ACAM Southern California chapter and have also spoken at various national conferences on topics of BSA and fraud. And I'd like to present Radhika Dholakia-Lipton, also my co-presenter.
Thank you, Liz. Hi. I too, similar to Liz, have been in the financial services industry for almost 30 years and served in a variety of roles, from starting in sales in Wells Fargo to creating my own de novo bank with a team of experts. But in 2017, started my own consulting company called RAD LLC, and we provide compliance and internal audit services. And it's a pleasure to be here. Thank you, WBA, for having us both.
Yes, thank you so much. And throughout this session, we do encourage everybody to ask questions by utilizing the chat box, and we will be more than happy to try to answer them throughout the session. And if not, we'll leave time at the end of the session as well to go through your questions. So today's agenda, as you see here, we will start with frauds and scams and how has your BSA program changed due to the pandemic, the COVID-19. What do you do about training during this time? And then there are other things too you also need to remember is to review the BSA and program guidances issued by the various government agencies. So I'll turn it over to Radhika now to start the presentation.
Thank you, Liz. Well, you know, it's interesting because actually if you categorize some of the new areas of risk within the COVID environment, they're really not different. They just have a different name. The first one is, for example, PPP loan fraud. Well, we've always tracked loan fraud in our BSA programs. We just have another product now to consider. Cyber attacks has been a discussion we've been having at the BSA table for quite some time. There has been a rise of unemployment scams. So not so much a new scam, but definitely a lot more transactions. So heightened risk in that area. And then, you know, just an overall catch-all, other scams and schemes, which I'm going to go over in a little bit of detail. So, as I said, you know, we actively have been pursuing the PPP, and, you know, I think all the financial institutions kind of hustle to put together a very effective PPP program, and of course engaged BSA and compliance and everything else. But now what we're starting to see is the fraud that's coming out of this program. The DOJ has been publishing quite a bit, and I think what you'll see is there's no de minimis. They're not going after PPP loan fraud that has a $250,000 line or loan. They're even, I've just recently read, they're even going after companies that are guilty for even a $19,000 loan. So no one is really exempt from this. And they are actively pursuing fraudulent activity under the PPP program. You know, over $1 billion has gone to companies that have double dipped. That's a lot of fraud right there. And received multiple loans in violation of the rules. They have falsified bank documents. They've created shell companies, one owner owning multiple companies and going around to various community banks. And although most community banks did initially just offer to their existing client base, which would have been easier to manage that risk, but as we all know, many of the bigger banks had trouble getting their program up and running, which sort of alarmed a lot of the smaller business people in terms of, if my big bank doesn't get me a loan and the funds run out, what do I do, right? So we started to see a lot of the community banks open up their doors to smaller businesses and allow them, even if they weren't customers yet, to apply and obtain a PPP loan. Suspects, as I said, you know, they had a variety of different schemes, fake tax returns, fake bank documents, I don't know if many of you remember, I think I want to say about 20 years ago, there was a lot of issues with small little financial firms creating fake companies and taking advantage of the small $50,000 loans. If you remember that back in the day, and there was a lot of fraud, the same thing is happening here under PPP. According to the July report from the CBA Office of the Inspector General, the organization is investigating over 440 financial institutions of all sizes for possible fraud and false documents and false loans.
If I may add too, Radhika, is that I was very surprised at how quickly the DOJ started prosecuting. I think about a month after the first PPP loans were rolling out, DOJ was quick to start investigating and identifying PPP loan fraud, which surprised me. Usually I thought it would take, months after the PPP loans were issued, but they started prosecuting and arresting immediately. So they are on top of this. But I think a lot of the community banks too, as much as this is advantageous for them too, to bring on new clients, these are clients that are existing in their business with accounts at other banks. So they're only coming to the community banks to obtain the PPP loans and not bringing over their relationship. So the loan will be funded and you'll see those funds probably move out quickly back to another bank. So you don't have that visibility to determine how those funds are being utilized. And that'll come into play if the customer asks for loan forgiveness, because then you have the responsibility of identifying and doing the due diligence to meet the SBA's expectations of conducting what it takes, what all the requirements are to submit the paperwork for the loan forgiveness. Because if it's not done properly, then you as a community bank is holding, you're liable then. That loan forgiveness may not be granted.
Exactly, exactly. So when we talk about that as in relation to BSA, we just wanted to bring some potential red flags. Actually, we went over this slide. Some red flags to think about. Again, not very different than what you're already looking at from a BSA perspective, but things to consider. PPP applications and different names that maybe have some identical information, like maybe the same street address, same business address, but different names, different business names. Fake businesses established during the pandemic, that's beginning to be a concern where they're seeing that businesses, were established and falsified documentation and bank statements, which is what I brought to your attention a little bit earlier. New accounts applying for SBA loans. Again, this goes to what Liz said, that, not your current customer, but a new customer coming to your community bank. And then, as Liz just mentioned, as soon as the loan proceeds were given, money was moved out, maybe back to their big bank where they couldn't get the loan, and doing most of their transactions through their primary financial institution. So we have alerts for this kind of stuff, right? Don't we already have, Liz, alerts for money movement quickly? We have alerts for when wires come in and go out quickly. But I think what I would like to point out here is that, in terms of your AML solution that you use, did you create a new product code for PPP? Did you change your alerts to just look at PPP activity? Because as Liz said, once the forgiveness process starts, you're going to have to document, and I'm sure the lending department is going to come to BSA for some documentation. And we're going to talk about that a little bit more in Liz's presentation.
So just remember that, the underwriting standards, especially for new clients, they don't change. I know SBA, when they initiated the PPP loans, if they're an existing customer, it was a very straightforward one-pager application for the customer to submit versus a new customer. Now, you're still held to, the proper due diligence for all new clients.
Yes, absolutely. The next area that has increased risk is obviously cyber fraud and attacks, and that also includes, a variety of money mules and, different scams that come through the cyber. There was a case that I participated in a recent presentation, and there was a very interesting case that was presented, and that is that many community banks may not have a third-party vendor that they use for HR or career recruitment. And one of the recent scams that we saw was that let's just say me, I come to your website, I look at your careers page, and you've got a position for BSA officer. I apply for that position, and that resume that I upload has some, is possibly infected, has some malware. And then now the HR manager gets the resume, looks at it, thinks, oh, this looks good, and then forwards it on so now it's already within the network and it gets forwarded on. Those are, an example of, unintended, not just from the transactional side, but from an HR side where we could be at risk. Cybersecurity, cyber risk is on the rise more so now than ever, because our fraudsters, our bad actors know that people are working from home. We know that transactions have increased online and people are using other means to do their business. And they're just sitting around looking at different ways to hack into your system and your personal system as well as your financial institution.
So take a look at that FinCEN advisory too, because it provides a lot of good information.
Absolutely. Some of the key red flags to think about or some of the key areas that emerge from this is violation of Know Your Customer, digital manipulation of identity documentation. I don't know how many financial institutions listening today offer online account opening, or during COVID, were offering some alternative like faxing in of IDs or what have you. But there's been a lot of digital manipulation of identity, a lot of credentials lost or stolen, and anti-detecting browsers that mimic the digital footprint. So when we talk about people taking over through this malware that they're presenting, they can actually go in online and pretend to be you and open an account. Some red flags, again, these are things that we all know every day, right, Liz? Spelling of the name doesn't completely match the identity. Or if, like I said, if the identity is a little foggy or, just not completely clear, there could be some issues there. Pictures, not matching the documentation, blurry, low resolution, things like that. Looking for irregularities that we would do for any customer. We talked about potentially even like auto wallet questions. If you did not have some form of automated onboarding solution, did you still implement an out of wallet process for a manual onboarding of new clients? Take a look again at if you've got a great relationship, and we really encourage relationship with other departments in the bank, is getting data that shows new IPs, or if, is your IT department sending you a report on a daily or weekly basis saying this person's logged in from a different IP now? Things to look for. And I know that we look for that under the BSA program under a normal situation, right? Customer logs in more frequently, or there's more money movement. Same kind of monitoring tactics, just under a COVID environment.
If I can go back to that, just to add regarding